Hey, what's up everybody? It's Rob Gill here at Epic. Today's topic is how to buy real estate by using life insurance. So here's the key. Once you begin to understand the effects of life insurance from a Swiss Army knife perspective and how to get multiple uses of each and every dollar through the velocity of money multiplier strategy, you could massively accelerate your real estate purchases by using life insurance as the pass-through to get to that place. And we have with us, back by popular demand, yes, by popular demand, none other than Teresa Trigas-Pfefferly, real estate guru, has 160 plus agents that report to her, owns her own office space as a shareholder in it, and she's here to discuss with me the merits on how to use life insurance as a turbocharger to purchase real estate as an investment.
Absolutely.
Yes.
Yeah.
So thanks for coming back.
Thank you
Love
so
it.
much for
How you
having
doing?
me. I'm amazing.
So you sell real estate all day long, right?
I sell real estate all day long.
And your agents sell real estate all day long?
Yes.
And when people typically buy real estate, you know, people that really do a lot of research and understand how to get 4 different rates of return when they purchase real estate, which is cash flow,
Yes.
mortgage interest write-off, depreciation of the asset on your tax return,
Yes.
and then obviously if you buy it today, 10 years from now, you want to sell it at a higher price. Those
Right,
are 4 different,
appreciation.
4 different spins, right? But what about when you use life insurance as a banking strategy? Do real estate agents like that when they talk to their clients? Do they enjoy that concept? And does it make sense?
I think that the average real estate agent may not even understand that concept themselves.
Really?
Yeah.
Okay, so it's an educational thing.
It's an educational thing, which is why it's so important to have someone like yourself or someone from your team who can really break it down for them, that building that cash value and the ability to borrow for a down payment really, I mean, that's what most people, when they're starting out investing for the first time, they're trying to figure out, where's my down payment coming from? Am I taking equity out of my house? Is it my bonus this year? And to be able to have something like that at their disposal, that they could borrow and pay back and borrow again, and it really sets itself up for building a portfolio, having that leverage.
Yeah, and think about it, because you've seen mortgages your whole career when it comes to real estate. You know, you have a 15-year mortgage, $100,000, it may cost like $150 over 15 years.
100%.
Right? But if you take the 100 out of your policy as the down payment on that $500,000 piece of commercial real estate, and now the renter pays back that money over 15 years, well, guess what? That 150 is still working in your world instead of the bank's world.
Absolutely.
Right? And that's where, if everybody out there understands the velocity of money multiplier strategy, I'll keep it simple. You give the bank 100 grand and they give you 1%, but at the same time, they make 40 cents on every dollar that you give them. So they're making 40,000 on your 100,000 while you're making 1,000. They don't take financial risk. They take credit risk, right? So, you know, Teresa, when it comes to like understanding the entrepreneurial side and a lot of different folks that you deal with, do a lot of your investors, real estate investors, do they understand this concept? Is that something that's new to them? Has anyone ever brought it to them? What is the typical, you know, information that you're hearing out there when it comes to using life insurance as a turbocharger?
So I think that using life insurance as the turbocharge is really for that segment of investors, right? Because so your experienced full-time investors have their bankroll with the bank, right? And they have their line of credit that they're going to use over and over and over again. But that is not every investor in the marketplace, right? So there's a bulk of the investors, first-time investors, and individual investors, right? I would consider myself an individual investor. I have a small portfolio. We happen to have 7 properties currently. And that would be a vehicle that would be very attractive to us, right? Because we are not in the space of investing full-time and making all of our money off of that. The investments for us are to supplement passive income and supplement retirement.
And you as a real estate purchaser and understanding the value of growth in real estate, it's a rinse and repeat model once you begin to start funding all these different banks. What I mean by when I say banks, these life insurance policies, and that gives you the ability to really kind of go back in. And as Teresa pointed out, this is important. You borrow, let me just go back to the $100,000. You're borrowing $100,000, you're paying it back over 15 years. but you're also still paying your normal premiums, which means 2 or 3 years later, you could borrow another 25, 30,000 out for another piece of property.
Absolutely.
And do rinse and repeat. And now your properties are growing in value, which means you could also leverage off your properties.
1,000%.
Do HELOCs, pay off your policy down payment, go back and forth. And now you become a magician, although it's science.
Yes.
In other people's money, in this case is the bank.
And maybe in, let's say, this market, right? We're in this pandemic market. Maybe they've acquired property over the last 5 years and they want to take advantage of the appreciation.
Yes.
Cash out of that and then buy something bigger.
Yes.
That gives them a higher yield on their money.
Yeah. Do you have any folks that have primary residence that are using their house money right now to buy investment properties?
Yes.
And how's that? I know we're in New Jersey, but how's that playing out right now?
Well, I mean, if they have the equity, right? If they have the equity, it plays out well, right? They take out a line of credit, they take out a home equity line, they use that as the down payment.
Yep.
And then oftentimes, if you have the tolerance for it,
yep.
buy something that needs some repair.
Yep.
Buy it, repair it, rent it, and then cash out and pay yourself back.
Yeah, so and by the way, Teresa's saying don't take money out of your house to go on a European vacation.
Yeah.
Certainly don't buy a Bentley.
No.
Right?
Although I want a Bentley.
Yeah, so would I.
You know.
Don't buy a Bentley, but use the money wisely if it sits and fits with your core values and you have the stomach for it, right? You understand the risk. But now all of a sudden, if you take 100, 200 out of your house, you're using that as a down payment on a rental piece of property. You're going to pick up those 4 rates of return, and then you have the rent to pay back the HELOC. That's another way of creating money in motion, because if money stays in motion, it begins to multiply. If it doesn't stay in motion, if it stays still, like inside an IRA or 401k, it's exposed to taxes, inflation, lost opportunity cost, and risk, right? So, when it comes to really, and we like to consider life insurance as a Swiss Army knife because there's so much flexibility in there.
Right.
Because think about it, and you as a real estate owner know this, a lot of times because people depreciate their properties, one of the things they're not aware of later on in life is they have to recapture the depreciation and ordinary income, as well as whatever the long-term capital gains are if they were to sell that property.
Right.
So the knee-jerk reaction is do a 1031 exchange.
Right.
However, if along the way you have life insurance, it could complement that and give you protection from those type of exchanges that would otherwise create a major tax liability. Is there anything that you want to share to all the folks out there as a starting point on what this looks like?
I would say this, that everyone has a different risk tolerance and everyone wants to be involved in owning real estate at different levels. Yep. And for some of you, that might be you want to manage your own properties. For some of you, you might want to hire a property manager. Others of you might want to find partners who want to be the active manager in the real estate, and you just bring the money to the table and reap the financial reward of your 50%.
Yep. And
right?
Brand, the money would be coming from your life insurance policy.
Absolutely.
Right?
Yeah, absolutely. So I would say that really you want to dig in and find the right partners. And I think that means find the right real estate professional who understands all the nuances, who's not just ready to jump because they're excited about selling a property. It's not about selling a property. It's about helping someone build a future in real estate. Someone who has the right relationships with a financial professional.
Yep.
Someone who has telling you, make sure you talk to your financial professional, talk to your CPA, make sure you know exactly where you stand, and let's find the right fit for you, because there are a plethora of opportunities all across the board with all of those different variances.
Wow, that was awesome. And Double TP is dropping knowledge left and right, so always understand that collaboration between real estate agents, real estate offices, all different types of insurance agents planning opportunities for the betterment of the client, who, by the way, our goal and our job is not to tell you what to do. Our job is to meet you where you are and provide strategies and solutions that are based on your goals and objectives, and provide as much education as we can on all of the different products that are out there today, the advantages and disadvantages, and we're pushing content every single day. If you like what you hear, please hit the subscribe button. Also, if you have any comments, questions, or just want to add some flavor to what's going on, feel free to add that below.